Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to another edition of the Extreme Speed Live. Well, before we kickstart the session, as usual, let's run through our daily routine by confirming that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi. So your highs will give me a positive feedbacks that we are good to go this morning, and then we can kickstart the session. Thank you very much as you do so. So I look forward to your feedbacks in the comment section while I load up my comment box. Thank you very much, guys. Besides, I noticed some individuals in the comment section, people like Jasper Rose in the comment section promoting external platforms for profits in the comment section. Please be aware that ExtremSpeed is not affiliated with these promotions, and we strongly advise against engaging with them. Please, if you come across any suspicious activity, do not click on external links or share personal informations with these guys. They are spammers and they are in no way connected to Extreme Speed at all. So please, let's take note of this in the comment section. Thank you very much, guys. So I'm beginning to see some comments rolling in right here. Thank you very much for these confirmations. Emmanuel Lopes, good morning. Stefan, good morning to you. Thank you very much for this confirmation. Lupi, good morning to you. Hello, Carrie, good morning to you. Thank you very much for that. Thank you very much. Vina Real, good morning to you too. Pepe Cos, good morning. Costanza, good morning to you. Sherry Suyon, good morning. Vinrel, Virel says he's from Philippines. Good morning to you. Glad to have you around with us this morning. Michael001, Lena, good morning to you. Of course, Lena, we are going to be doing gold this morning. Gold is part of the assets on our watch list since the beginning of the week. So I encourage you to stay tuned in so you don't miss out on the ideas we will be sharing on the gold asset. Colino, good morning to you. All right, all right. So I think these are very positive feedbacks that we are good to go this morning. And it's on this note I welcome you once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential direction of price action during the New York session, and of course strategically position ourselves in such a way that we can capitalize on any potential move. Well, the last 36 hours has been quite interesting, as you would have noticed that there's been quite a lot of fundamental factors that has been driving the market sentiment. Yesterday, we witnessed some notable volatility during yesterday's trading session, which was indeed driven by the United Kingdom employment data and of course the US inflation report, which came in beyond expectation at 0.1%, hereby becoming a clog in the wheel of majority who were thinking that the Federal Reserve is about rounding off on their monetary policy tightening program, which at this point now we're at a limbo as we are not sure if the Fed will be maintaining the interest rate or they're likely going to be having another rate hike as a response to this sticky inflation that was observed yesterday. So we are really in a very interesting situation right now, and as technical traders, we will be identifying structures and patterns that we will be using to guide our trading decisions for today. So I encourage us all not to miss out on any of the valuable ideas we will be deliberating here today. Now, for those of you who are joining us for the first time, I'm very glad to have you around with us this morning, and I'm very sure you will be wondering what this is all about. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-up and reviews of our current positions in preparation of the New York sessions. So since the beginning of the week, we have been monitoring four major financial assets, which includes the USOILSPOT, the GBPUSD, the USTech100, and of course, the XAUUSD. Now, the session usually kickstarts about 10 a.m. UTC, 11 a.m. West African time. So I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be sharing during the course of the session. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, remember that the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do on a daily basis is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment today. Now, for those of you who have been with me for a while now, you know how we usually do this, and we know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, for today, Wednesday, December 13th, what I did this morning was to include the medium impact event, as within the medium impact event, we have some impactful data from the United Kingdom, which was not included in the high impactful event. Now, for today, Wednesday, December 13th, we already have a barrage of economic features from the United Kingdom, which of course has influenced the market sentiment in the last couple of hours. Now, the first one that came in from the United Kingdom this morning is the gross domestic product for the month of March, which is usually released by the National Statistics, and this data is always published on a monthly basis and is a measure of the total value of all goods and services produced in the United Kingdom during the last month. Now, from the data we have here compared to what we had during the previous month and the market expectations, the figure this morning wasn't that impressive at all, as we had an actual data of deficit of 0.3% as against an expansion of last month, which was at 0.2%. This is not a very good figure at all. Then for the industrial production and manufacturing production as well, we can see what the data is saying here too as well. It was nothing close to the previous month, as every figure we have here was just below expectation, giving us deficit variances in that regard. And this tells us a lot about the United Kingdom economy at this point in time. Now, today we will be looking at the GBPUSD and how the market participants had reacted to this event and how we shall be positioning ourselves for next potential moves. Then later on today, I think in about 2 hours from now, we will be looking forward to the producer price index from the United States economic docket. Now, for those of us who do not know, the producer price index is usually released by the Bureau of Labor Statistics, Department of Labor, and in fact, this data here measures the average changes in prices in primary markets of the United States by producers of commodities in all states of processing. Now, in generally speaking, a high reading is considered as positive, that is bullish for the US dollar, where a low reading is considered as negative. Now, if you look at the previous data here for the month of October, it came in at a deficit of 0.5%, showing us that there was a contraction in the month of October. However, if you look at what consensus are projecting for the month of November, they are projecting an expansion of 1%, which is higher than the previous data. So we look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then later on today, later on today, in about 7 to 8 hours from now, we will be looking at the Fed interest rate decision, which is one event that everyone in the market is looking forward to, as most commodities and assets are majorly US dollar denominated. Now, this is an outcome of the Federal Reserve meeting where they decide whether to change or maintain the current interest rate. Now, the decision has a significant impact on market sentiment as it reflects the central bank's assessment of economic conditions, and any changes can influence borrowing costs, investments, and overall economic activity. Then later on today, we will be listening to the Fed chairman during the FOMC press conference. This is a regular event where the Federal Reserve chairman communicates the central bank's monetary policy decisions, economic outlook, and answers questions from the media. Its impact on market sentiment is really substantial as investors closely analyze a statement for insight into future interest rate changes and overall economic conditions. Now, if you look at what we have today, you will see that we have a barrage of economic events that everyone in the market will be looking forward to. And in fact, the anticipation of this event will reflect on the chart as price action. Now, with that being said, and a better insight into the fundamental factors, let's dive right into the business. Now, as usual, the first asset we will be taking on today. So I had to open up this chart earlier so that we will not have any delay by the time we are about to start. So the first asset we are looking at today is going to be the US All Spot. And in fact, what a wonderful 24 hours we have here, as we saw price action nosedive to the downside, breaking down the ascending trend line and a couple of levels we identified yesterday as a criteria for us to join a bearish momentum. So currently, if you still have your positions running, you should be having a minimum of 2 sell positions performing very well at this point in time, with accumulating a minimum of 550 pips or 500 pips thereabout as oil prices continue to decline in response to the US inflation data for the month of November. Now, for the sake of those who are not part of our live session yesterday, I would like us to quickly run through what really happened at the beginning of the week, what really happened yesterday that that made us to consider selling this particular asset. Now, if you look at the structure closely, you will see that since the beginning of the week, we initially identified a range where price was first of all confined within the $72 level, which happens to be our key level for this week, and the $71.38 level. Now, this whole situation expanded into the $71 area, giving us a wider range to work with ahead of yesterday's trading session. However, it is important to state here that the beginning of the week was not really that profitable for us, as we had a couple of stop out. We had our positions stopped out in a loss a couple of times. Remember, yesterday we had a breakout of the $72 area, which of course unfortunately went into a loss as selling pressure began. Then we had some couple of sell positions here which did not do very well at all. But thank goodness we were able to recoup the loss we incurred at the beginning of the week. If you remember, yesterday we said that if the buy pressure was unable to continue above the $72 level, that a breakdown of the ascending trend line and the $71.38 level will be welcoming selling position, and this was exactly what happened a couple of hours into the New York session yesterday. We saw price break down, retest the structure, and all the way to the downside price action went, giving us a significant amount of profits in that regard. And if you remember vividly, we said we will be adding more positions if price action goes on to break down the $71 area. So giving us a minimum of 2 positions running with over 500 pips in profit at this point in time. Now, for those of you who capitalize on these opportunities, well done, and kudos to you for being on standby to capitalize on this move. And in fact, if you still have a sell position running right now, I want to emphasize here that it is high time you moved all your stop losses to secure this current sell position. And for me, I will be advising you that anywhere around the $69.20 level seems most appropriate to moving all your stop losses, as we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our plans for today? Are we going to continue selling the US All Spot, or are there chances that buyers could come in? Maybe a temporary retracement move back into structure to retest it in anticipation of a downtrend scenario. However, we should also take into consideration the fact that there are quite a lot of fundamental factors and behind the scenes scenarios that is affecting the market sentiment so far. Now, from the CPI data that came in from the United States yesterday, we saw how the market reacted to it. Now, in fact, the oil market is showing its complexity at this point in time, with the U.S. Energy Information Administration, that is the EIA, adjusting its 2023 supply estimate by 300,000 barrels per day, dovetailing to 12.93 million barrels per day. And this indicates a changing outlook for U.S. oil production, and this adjustment adds a new dimension to the market dynamics, particularly as the OPEC Plus output cut agreement encounters difficulties in managing supplies. Now, furthermore, the geopolitical landscape is contributing to the market's uncertainty, as evidenced by the attack on a Norwegian commercial tank by the Yemen's Houthis in protest against Israel's action in Hamas, is also heightening the risk of disruption in supply of oil from the Middle East. Now, in light of this development, it is so crucial that we safeguard all our sell positions while remaining attentive to new trading opportunities from this crucial area. Now, as everyone prepares for the PPI data today, and of course the interest rate decision and the Fed chairman's speech later today, how do we intend to position ourselves for the next move? Now, before we go into the details here, and for the sake of those who were not part of our earlier sessions, let's run through the higher time frame so we can have an holistic perspective into what is going on this in this market from a technical standpoint. Now, to start with, we began the week's analysis on the 4 hours time frame, if you remember, And what we did on the 4 hours time frame was to take into consideration the nature of price action since the month of October. And it's quite clear that price action has been very, very bearish. As you will see, we saw our price action transitioned into a descending channel. So when we connected a series of lower highs, we had the resistant line of that descending channel. Then we connected the series of lower lows to give us the support line of that descending channel. And with a descending channel like this, when price action still remains within the structure, we of course always want to be looking out for patterns and structures that support the idea of selling. Now, to make things easy for us to guide our decisions for this week, we identified a key level which is situated at the psychological area. Considering the round figure of that price, we have it situated at the $72 area. Now, you saw what happened here last week. This level here since the month of November has been a critical area where price action, the direction of price action is determined. Now look at what happened here in the month of November. It was more of a buying area. Then fast forward to the first day of the month of December, we saw buy pressure here before the level was finally broken to the downside during the midweek of last week's trading session. And from a technical standpoint, when price action breaks down a key structure like this, we did talk about the expectation that price may come back to retest the structure and incite a downtrend continuation, which was exactly what happened yesterday as we capitalized on the bearish momentum to the downside. Now, it has been quite an interesting week for us all here, though the week started not too good for us, but we were able to recoup the losses we incurred at the beginning of the week, and of course did made some profit on top of it. Now, with the situation we have right now, price action is back within this major descending trend line we identified at the beginning of the week. Now, will price action continue to respect the trend line to continue to push price to the downside? And in fact, I would need price to break down the lowest point price action has been for this week, which is at the $68 level. And in fact, this is one area we will be using to guide any downtrend continuation at this point. However, we cannot ignore the potentials that buyers too may likely come in, and if that is going to be the case, we might likely see price climb back above the trend line to incite an uptrend, maybe back into the $72 area. We never can tell, or even break out of that level. So you will see that we are at a crucial juncture here, as you will see that in the last 1, 2, 3, 4, 5, in the last 20 hours after price tested that 68 level, we have seen a consolidation phase happen around this area, which is not a surprise to us at all, as we do note that the anticipation of the PPI and the Fed interest rate decision is going to be an event that will make majority of market participants to step aside waiting for cues before making another decision from this area. So what we will be doing right now is to scale down into the lower time frame to see how we intend to position ourselves for the next move. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. So I will just zoom right into where our center of focus is going to be for today. So I have something here. We have the lowest point for this week, which is exactly at the $68 area. So let's mark this level out on our chart. That's the lowest point price action has gotten to. And in fact, if you look at throughout the Asian session today, it was more of a consolidation phase as soon as price it's the $68.50 level. And for me, I'm beginning to think that price action may transition into a reversal pattern, maybe in the form of a head and shoulder pattern. So give me a moment. I want to mark out this level. So we also have the $69 area, which you do want to also mark out on your chart. So hold on a second. I want to give this one a green color. I want to emphasize the importance of these levels. The same thing with this one too as well. I want to give it a green color to emphasize its importance, as it will be guiding our decisions for today. So we have two levels. So since the later part of the New York session yesterday, price action has been caught within the $69 area and the $68 level. Now, looking at the structure and considering the impulsive leg that brought us into this point, I'm beginning to notice the emergence of a potential reversal pattern in the form of an inverse head and shoulder pattern, which may allow the $69 area to be the neckline we look out for to join an uptrend continuation. So in that regard, we want to be looking out for buying opportunities above the $69 area, and of course selling opportunities below the $68 area, which happens to be the lowest point price action has been for this week. So it's a very important that we exercise patience at this sensitive zone, considering the factors behind the scenes that will be affecting the market sentiment. So let's see how the market will play out from the structure. Our center of focus for today's trading session is basically between the $69 level and the $68 area, where depending on the direction of this breakout will incite where price is likely going to be going for the second half of this week. So these are my views here. I want to encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. Now, if price action breaks out of the $69 area, we might see a situation where price could retrace back into the structure that was broken earlier, or even the ascending trend line that was broken, and that in fact will dovetail to a minimum of 200 pips and a maximum of about 300 pips to catch here, which is not bad at all if price begins that momentum. So let's be on standby to capitalize on that one. Now, if price action does not do that and instead drops in such a way that it breaks down the $68 area, then at this point I want to feel comfortable joining a downtrend continuation. So these are my views on the US All Sport for this morning. Let's see how price action will play out going from this point in time. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right, so I can see a couple of questions. Sorry, a couple of comments here. Sorry. Vinaril says speak Tagalog. I think that's a popular language in, is it the Philippines? I think. Yeah, I think it's the Philippines, I guess. Glad to have you around with us. Sherry Suyun. Okay, PK78, good morning to you. Good day to you. Thank you very much. Tommy Katz, good morning to you. Dinesh Kumar, good morning to you. Glad to have you around with us this morning. All right, so in the absence of no questions, I want to take this as a confirmation that we are all good to go this morning. And in that regard, we shall be moving right into the next asset on our watch list. So the next asset on our watch list for today is the USTech 100. Another phenomenal move we had here yesterday, but this asset also was not devoid of the volatility that happened as a result of the surprised US CPI data that came in yesterday. So remember that we have been buying these assets since the beginning of the week, and since price broke out of that range we identified, price had moved a whooping 280 pips plus on this particular asset. And don't forget that we had multiple entries to capitalize and maximize on this potential move. Now, for the sake of those who are not part of our earlier sessions, let's run through how the week started for us and what led to the decisions of buying the USTech 100. Now, the first thing we did observe on the higher time frame was the $16,000 level. We will be talking about that in a moment, so please hold on. So we have the $16,000 level, which happens to be our key level for this week, and you know how we use our key levels in this community. As long as price remains above the key level, we will continue to look out for patterns and structures that supports the idea of buying that asset. Now, in addition to the key level, we were able to spot a range at the beginning of the week as we saw our price action was confined within the $16,097 level and the $16,037 area. And with this kind of range here, we do know that it emphasized the level of uncertainty that was going on in the market during that first 12 to 13 hours of the new week. Now, at that situation, we were waiting patiently for a signal to come in the form of a breakout of the resistance line, considering the fact that price still remains above our key level. And this was exactly what happened. We saw price climb up, break out the structure, moved over 160 pips in that regard. Then we also added another position at the breakout of the 16,160, and that one as well moved over 95 pips in that regard before that volatility came in yesterday. And remember that during our live session yesterday, I mentioned that we should move all stop losses to that area around the 16,200 250 area to secure all position. And if you had done that, you will see that price did take us out of that position during the volatility, and in fact also triggered a buy position at this point, which of course went into a loss before price action came back again to break out of the 16,260 level. That is our resistance line there, with an engulfing candle the second time. And in fact, if you had missed out on that opportunity, the market did come back to retest the structure, then continued the uptrend continuation. Now look at, since then price had moved a significant 120 pips thereabout before we begin to notice some selling pressure around the 16,390. Now, for those of us who still have a position running at this point in time, I will encourage us all to move all stop losses and secure this position, as anything could happen from this area. Now, from what I can see here, I will be suggesting that anywhere around the 16,360 level, 60 zone, seems most appropriate to move your stop loss into, and ensure you give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying, or are there chances that price could retrace, maybe as a result of profit taking activities from market participants in this environment? Now, before we go into the details on what we will be doing today, let's scale up into our higher time frame where we started this week to quickly have an holistic perspective into what is going on in this particular market. Now, we did acknowledge that price action has been very, very bullish since the beginning of the year, but that was not where our center of focus was, but this range where we saw at the beginning of the week that price action has been confined within the 16,160 and the 15,750 since the mid-month of November to emphasize the indecision going on here. And of course, you know how we use this kind of flat channel. We want to wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, as a result of the distance of price action to either the resistance line or the support line at the beginning of the week, we decided to identify a key level that we said we will be using to guide our trading decisions for this week. And the reason we chose the $16,000 level is, first of all, it is a psychological area considering the round figure of that price. And secondly, this level here had played a major role in determining the direction of price action since the beginning of the month of November. Now, we did said here that if price remains above the key level, we will look out for buying opportunities so that we can actually join the momentum even before the breakout of the resistance line of that range happens. As you will see, price really had moved very, very well. Now, at this point in time, we are at a crucial juncture where we do not know if profit-taking activities will start coming in anytime soon. Now that price action has broken out of a significant structure, that resistance line of that range, the question going into the New York session today is, will this selling pressure persist in such a way that it will bring price to come back to retest the 16,160, maybe in anticipation of an uptrend continuation? Now, if you zoom into this current structure right now, that is in the last 16 hours, you will see that since price action tested that area around the 16,395, we have been noticing selling pressure around that area, giving us signs that buyers are finding it difficult to break out of that area. Now, will the sell pressure here persist to incite a downtrend? Well, to answer that question, we do want to be scaling down back into the 1 hour time frame. Now we are back into the 1 hour time frame, and while I was trying to dissect the current market structure this morning, I was able to confirm that we are actually within a temporary bullish trend line after capturing the series of higher lows since last week Friday. Now, if you connect the series of higher lows since last week Friday appropriately, you would have this ascending trend line marked out, and in fact this trend line here is going to be playing a major role in guiding our trading decisions for today. Now, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in a buy position, and we are not going to be selling unless this trend line is breached and broken to the downside. Now, with the information we have gathered here, let's zoom into what has been going on in this market in the last 12 hours. Now, if you look at the structure closely, you will see that we have the 16,390 area, which happens to be the resistant line of this range. I think I should be doing some readjustment here. So let me allow this to, so I think we should be rounding off to, let's say, 16,395 should be much more reasonable. So let me just do this right here and readjust this to 16,395. So as soon as price action tested 16,395, we continue to see selling pressure resume around that area. So we have a range to work with for today's trading session, where the 16,370 will be the support line of this range. Now, you know how we do it in this community, especially when we identify this kind of flat channel on our market structure. It's a sign that market participants are very indecisive here. So we'll want to wait patiently for either the breakout of that resistance line to confirm an uptrend continuation. Now it is appropriate for us to place a buy stop order above the 16,395 to capitalize on that uptrend continuation. However, in as much as we are looking out for an uptrend move from this area, there are still chances that some profit taking activities will come in at any point in time, which could result into a retracement of that impulsive move. Now, if price action does break down, retest the 16,370, that is the support line of that range, we might likely see a sell-off, maybe back into this ascending trend line, where depending on how price reacts to this trend line will now determine if we are going to be joining the uptrend move after noticing maybe buy pressure or a reversal pattern to maximize the potential of that bullish move. However, if price drops below the ascending trend line, then this could incite a sell-off at this point in time. Now, there is a caveat to this old trading setup. Personally, I would not be selling below the 16,370 unless a retest of structure happens before price goes, because it's more or less like a counter trend opportunity at this point. The holistic view is looking very bullish. So if you are someone like me, I would rather wait for price action to come into this ascending trend line. Now, depending on how price reacts to this trend line will now determine if we are going to be selling or buying. Now, but if you are a counter trend trader or a scalper or a day trader, you might want to capitalize on this. How many pips move is that? About 60 pips move, retracing back into the ascending trend line before maybe another uptrend move will happen or a major sell-off from that trend line will happen. So our center of focus for today is basically going to be between the 16,395 and the 16,370, where depending on the direction of the breakout will give us clues into where price may likely want to go for today's trading session. So I just encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference guide to guide our trading decisions for today. So these are my views on the USTech 100. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5 seconds, because we are already running out of time right now, to see if there are any questions, while you can also use that time to mark out these levels on your chart. Ohaho, hello, how are you? Good morning. Leo Kex, Nikki 74, Camilo 1973, Haruyin, good morning to you guys. Glad to have you around with us this morning. And in the absence of no questions, I will take this as a confirmation that we are all on the same page and I can be permitted to move on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, that is the GBPUSD, where we have an interesting sell position running at this particular point in time after a very volatile 24 hours in this particular market. Now, it has been how many hours now? 24 hours since our last analysis on this asset, and the sell position initiated during yesterday's session holds its ground as the pound sterling navigates a lateral path, preparing for an influx of data from both the United States and the United Kingdom economic calendar. Now, this morning we had a barrage of economic events from the United Kingdom. We had the monthly gross domestic product, that is the GDP, and of course the industrial production for the month of October, and the manufacturing production too as well. And from the data we had this morning, it really shows that the United Kingdom economy is not really doing very well at this point in time. Now, additionally, Thursday, which is tomorrow, is poised for the Bank of England to maintain a hawkish hold, keeping interest rates steady at 5.25%. So this is what the majority in the market are looking forward to. Now, in anticipation of tomorrow, the market has been very choppy since the beginning of the week. Remember that we saw price action confined within a range during the first 12 to 13 hours of the week, as we saw price confined within the 1.2550 level and the 1.25350 area to give us an insight into the level of indecision at that particular point in time. Now, in addition to that range was this ascending trend line we spotted on the higher time frame. Remember, we had this ascending trend line which has been supporting the bullish momentum in the last 4 to 6 weeks in this market, and of course we did agree that as long as price action remain above the ascending trend line, we shall feel comfortable in our buy position. Now, with the fact that price action was sitting above the ascending trend line, we positioned ourselves above the resistant line of that range at the 1.25580 level to capitalize on the uptrend. And in fact, price did move to the upside multiple times. We saw the first one here moved about 40 pips thereabouts. The second one moved about 35-40 pips. The third one moved, in fact it was more of buying from that area, but at every point in time it failed woefully as soon as price action tested anywhere between the 1.26 and 1.259 to emphasize the strength of the sellers at that particular zone in this market. So it was quite a very choppy start to the week. Then one thing we said here yesterday that ahead of the New York session is that if it so happens, due to the continued selling pressure from the zone, that price action drops and breaks down the ascending trend line, we do want to be getting ready to sell. So we saw price break down the ascending trend line, came back to retest the structure. If you have missed that, market was kind enough to come back, did a couple of consolidation, and it went all the way to the downside. And remember that we had this level, had the 1.255, this red line here, that we set a breakdown retest, which also shares a confluence with the ascending trend line, will be giving us the privilege of joining a bearish move. And if you are taking advantage of that opportunity, well done to you, as you will currently be having two sell positions running right now. The first one is running with about 35 pips in profit, while the second one, triggered at the breakdown of the 1.25350, is running with about 20 pips. So we have a total of 50 pips running at this point in time. Now, I will be encouraging us all to move our stop losses right to the first entry in the meantime, as this bearish momentum is not yet a confirmation that price may likely continue to the downside, and I will be showing you why this is so from a technical perspective on the higher time frame. Now, with a well secured position at this juncture, let's move right into the higher time frame to see what will be guiding our decisions for today. Now, on the 4 hours time frame, we will be having an holistic perspective into what is going on here. And remember, especially for those who are part of our earlier sessions, we did emphasize that the 4 hours time frame is looking very bullish after taking into consideration the nature of price action since the second week of the month of October. And in fact, we did connect the series of higher lows here, giving us a couple of ascending trend line, but this one right here is going to be the one we have been using for this week. Then we have the major one sitting right below here, which price action is yet to get to. Now, if we zoom into what has been going on since the beginning of this week, in fact since last week Friday, you will see that as soon as price gets into the trend line, we begin to notice buy pressure resume around that area, with the hopes that price action wants to continue the uptrend. However, the strong volatility happened here yesterday resulted in the breakdown of that ascending trend line with an engulfing bearish candle, breaking down that structure for the first time in the last 4 weeks. Now, the question here is, will this be a bearish momentum? Is this the beginning of a bearish momentum? Well, I can't conclude that at this point, as I will need price action to break down the major ascending trend line before I can really feel comfortable that we are truly going south. Now, in addition to this trend line is this key level we identified at the 1.25, a level which had played a major role in determining the direction of price action in the last 5 to 6 weeks. Now, price action is gradually approaching that level. Now, we do want to be seeing how the market is going to be reacting to this level. And one interesting thing about this level is how it shares a confluence beautifully with the ascending trend line we spotted earlier. Now, if price action can break down the 1.25, it would also have broken down the ascending trend line to give us a confirmation that we are going to be good selling this particular asset. However, if buy pressure persists above the structure and we see a situation where price action transitions into a reversal pattern, maybe a double bottom structure, head and shoulder pattern, or whatever you have there, then this could be a confirmation that price is respecting the ascending trend line one more time to incite an uptrend continuation. So you can see that we are at a very crucial juncture in this market. Even though price has broken out of the first ascending trend line, is still not yet a confirmation that truly we are going to the downside yet. Now, with the information we have gathered here, let's scale down into the 1 hour time frame and let's go back to see what we have been saying here. Now, on the 1 hour time frame, look at what we have. Remember, this is the key level I was telling you about on the 4 hours time frame, which shares a confluence with that ascending trend line. And I did mention that a breakdown of the structure will be all we need to now feel comfortable that sellers will be dictating the pace in the nearest future. Now, looking at the structure closely since last week Friday, you will see how this area around the 1.25250 has been a buying niche in this market. Now, the same thing happened right here on Tuesday, that was yesterday, and then as soon as price got into the zone 2, we begin to notice some buy pressure around this area. Now, if this persists, for me, it is a sign that buyers are still very present in this market, which makes me not to negate the idea that buyers may still come in. And that is why I said that we are not really sure that these bearish buyers we're seeing right now may hold for a long time. And that is why I said a breakdown of this one will negate all ideas that buyers still have a say in this market. Now, if the buy pressure around the 1.25250 persists, well, I would need price action to break out of this supply zone that is between the 1.260 and the 1.259 before I can feel very comfortable buying the GBP USD. As a breakout of this zone would have taken out all the sell positions within this area, and in fact you can see how this area had played a major role in negating all attempt by the buyers to break out of the structure. Yesterday's volatile move, you saw the same thing happen here as well. So I will feel very comfortable buying only at the breakout of this zone. However, it is important to note that we could probably buy even before the breakout of that zone happens, and that will only happen when we can find something like a series of higher highs and higher lows, maybe on our lower time frame, price breaking back above the ascending trend line. At this point, we are going to be within buyer's territory, and then maybe we can be part of an uptrend move even before the breakout of that structure happens. So this is my simple view on the GBP USD for today. If you have any questions, feel free to let me know in the comment section. And I want to emphasize that as we tread through these market dynamics, the broken trend line and the key level at the 1.25 area remains a pivotal reference point guiding our trading decisions in the current trading landscape. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to drop them in the comment section. I wouldn't be taking any time off this time around, as we're already out of time. So I will just quickly run through the final assets on our watch list for today. Now, the last asset on our watch list for today is my favorite asset, which is the XAUUSD. And in fact, we have quite an interesting situation going on at this point in time. Remember that we have been selling the XAUUSD since the beginning of the week, after we observed a range where price was confined within the $2,007.50 level and the 1,995 area. And during the first 6-7 hours of the week, we did notice that price action was tending towards the support line of that range, and in fact we saw price breakdown retest the 1,995, triggering our first sell position for the week. And of course, we did add some more positions at the breakdown of the $1,991.50 level to maximize the potential of the bearish move. So on that one, we were able to scoop in about 150 pips minimum before the bullish momentum came in and take us out of the sell position. And yesterday we saw some little bit of volatility. Some of us who might have taken some buy positions here on the XAUUSD, which would have gone into a loss, but it's okay. We still have enough time to recoup whatever loss we incurred, and of course be positive on this particular asset. Now, with the situation we have right now, the market is looking as if it is in a limbo, as you will see that the last 24 hours has seen price action confined within a range that is between the $1,983 level and the 1,976 area, to emphasize the level of indecision at this point. Well, I can still say that the gold still faces persistent selling pressure. It descends to a 3-week low, breaching that 1,976 level, which of course triggered a sell position for me, and of course that also has gone into a loss at this point in time, just about to hit my stop loss anytime from now. Now, the release of the US consumer price data, coupled with a robust job report from last Friday's session, that is the NFP data, diminishes prospect for an early Federal Reserve policy easing at this point in time, hereby opening up the idea that there could likely be a rate hike happen today. Now, consequently, funds appear to be moving away from safe haven assets such as gold in that regard, and of course fueled by optimism for additional stimulus measures in China. However, geopolitical uncertainties act as a counterbalance, offering potential support to bullish sentiment as well. So we cannot ignore the potentials that buyers can come in at any point in time. So our stance remains bearish as long as price action remains below the 1,976 level and the descending trend line, and of course open up to buying opportunities only if price action breaks out and retests the 1,983 level. Now, what I'm simply saying here is that while I was trying to dissect the current structure this morning in preparation for today's trading session, I was able to mark out this newly identified descending trend line after connecting the series of lower highs since the beginning of this week. And if we do that correctly, we should be having a couple of this descending trend line. So the first one is right here, and the second one should capture the high at the beginning of the week right here, which is where price action is currently oscillating at this point in time. So we have a couple of descending trend lines to work with. I would like to lighten this one a little bit, as this is not the significant one. The major one right here is this one at this point in time. Now, You know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we shall feel comfortable in a sell position. And like I told you earlier, I already have a sell position triggered at the 1976, and in fact is running in a loss right now of about 67 pips. So my stop losses is somewhere above the ascending trend line here, giving enough breathing space for price action to move around just in case it wants to respect the descending trend line one more time to push price to the downside. So we are at a very crucial juncture right now, and for those of you who did not sell, well done on that one, but I would advise that we can have a sell stop order again below the 1976, as we already have this level broken before, and this bullish momentum here could probably be a retracement to incite a downtrend continuation. So let's keep ourselves prepared to capitalize on any potential move at this point in time. Now, in as much as we're looking out for selling opportunities here, we cannot ignore the potentials that buyers could take over this market any point in time. Now, looking at what has been going on since Monday, you will see how the 1976 area has been a strong buying niche. Sellers were unable to even get close here, and when they did get close, breaking down the structure during the early hours of today, we immediately saw an engulfing bullish candle again springing out of the structure, and in fact broke out of this descending trend line along the line to incite the idea that buyers may likely come into this market. But I'm not going to be jumping into conclusions yet, as I will need a significant confirmations to happen before jumping into any positions. And since we already have a descending trend line to work with, I want to see price break out and retest this descending trend line to give me an opportunity to get to start thinking of buying this asset. So I want to see something like a breakout, retest of structure, then I would like to join. Then if price continues to climb and find new highs, then a breakout of the $1,991.50 level, and of course a breakout of the 2000, and the highest point for this week, which is at the $2007.50 level, will be welcoming additional buy position if price action gets thus far. So these are my views on the XAUUSD today. So you can see how crucial the juncture we are in right now, as our center of focus is basically going to be between the $1,983 level and the $1,976 area to guide our decisions for today. And if price action can take out this descending trend line, then this will open the door for buying opportunities in this market. So you do want to be marking out these levels and trend lines, as you will be using them as a reference point to guide your independent trading decisions for today. And it's on this note I will call it a day here. I don't know if you have any questions, so while I'm rounding off, if you have any questions whatsoever, feel free to drop them in the comment section, and trust me, I am here and willing to be of help in that regard. I see your comments, Sikos07, Seibu, and Bego Boy. Good morning to you guys, and glad to have you around with us this morning. So if you have questions, feel free to drop them in the comment section. And so far we've done pretty well this week, fairly well, let me say. We're still struggling on the GBPUSD. The XAUUSD is on a positive side of our portfolio. The USOILSPOT too has been doing very, very well. The USTech100 too, very, very well it has been doing so far. So let's see what will happen today. And in fact, today we were able to identify simple trading setups using fundamental tools such as trend lines, key levels, and chart patterns only to make a well-informed trading decision. So I just encourage us all to allow the structures to mature before we jump into any positions. And I do hope you are able to mark out these levels, as you will be needing them as a reference point to guide your independent trading decisions for today. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, if you do, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered here to make your own independent trading decisions. I see your comment, Opebalo. You're very much welcome and glad to. I never knew you were around. I was about asking after you some couple of minutes ago, but I did forget along the line while I was talking. Trust you are doing very well and glad to have you around with us, Opebalo. All right. So with that being said, I wish you all the best of luck today. And remember that any decisions we make in the financial market is more or less an educated guess until price action hits your TP target. And in that regard, you want to ensure that you have a well-defined risk management strategy to protect your positions against any pullback that might happen. And also remember that today comes up with a significant and impactful event from the United States, which could bring in some volatility in this market. So ensure your stop losses are in place. Very, very important as we gear up for the Federal Reserve interest rate decision, the PPI data, and of course the FOMC press conference, where we will be listening to what the Fed chairman is going to be saying as regards to the monetary policy outlook, the economic outlook, and of course the future interest rate decisions in the United States. So till then, I wish you all the best of luck, and I'm looking forward to seeing you tomorrow, same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get prepared for tomorrow's trading session, which also promises to be another exciting one. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.